Hmm. And how is the shift towards motor likely to happen? Is it going to impact your portfolio, profitability, claims ratios? What's the outlook on motor is what I'd want to really understand, because there's such a push with regard to auto growth.
In the recent months, we do see incremental opportunities playing out also in the context of commercial vehicles. And therefore, to that extent, possibly you may see a mix which can undergo a change. So that's something that we keep balancing every month in terms of which are the segments that we need to underwrite, which are the segments that we need to be slightly more guarded. And therefore, the outcome is what we kind of exhibit to the market. To your final point on how do we see the trend play out for motor going ahead, this has to be looked at in a couple of contexts. One, if you look at for motor industry combined ratios, it is currently elevated at 125%. This is the industry numbers. Industry combined ratios for motor is at 125%. And therefore, to that extent, it effectively means that you're losing 25 paise for every rupee of premium that you're underwriting. So that's a lot of money for the market to lose that. And therefore, to that extent, you have to be slightly more guarded in terms of what kind of quality of risk that you want to underwrite, which is why we have been very, very selective on the quality of the book that one wants to write in the context of motor. But within that, I think we are seeing a lot of green shoots, particularly with the spate of reforms that the various regulatory authorities have been able to put on ground. And that is kind of auguring very well in the context of ICICI Lombard. But in terms of how does one see the growth play out, very, very positive is the way we kind of look at in terms of how things will play out. So that is one factor in terms of the combined ratios for the industry. The second factor is this is the third year of the glide path for expense of management guidelines. So companies which have been in exceedance of the limits for expense of management has to bring down their expenses of management. For ICICI Lombard, we have always been well within the limits, and therefore that will also be a key factor that one would look at very, very closely in terms of how growth in motor is likely to shape up for going ahead.